Hello everybody, we're going to be going into SMTs, sequential SMTs, and cracking correlations today. These are hidden quarterly theory secrets that we can use to refine ICT and get a better understanding of the markets. What's an SMT? An SMT is the base cracking correlation that we should focus on before diving into anything else. And an SMT in general means smart money technique. ICT uses that smart money tool, divergence. And we use SMTs to find potential reversal points in the market by seeing if there's a divergence between two assets. Divergence between two assets is a cracking correlation. To find SMTs, find your correlated pair first. If you're using NQ, if you're trading NQ, you can use ES and YM. If you're using Euro/USD, you can use Great British Pound and USD. If you trade something else, feel free to ask me. I can 100% help you out with that in my Discord. See how, for this example that we have right here, we have NQ. NQ has this high right here and then this high. NQ takes out that high that we see. But what happens on ES? ES has this high right here, the same high as this one. And we have this high right here, the same high as this one. But price doesn't take that high out. In fact, this high doesn't go high enough to take this high out. I know I said a lot of highs, but just see how NQ took out that high, but ES didn't. That would be our cracking correlation / CIC, since there's a divergence between NQ and ES. And why do we use NQ and ES and YM and Euro, USD, and Great British Pound and USD? Because they're correlated pairs. If there's a divergence, there's a high chance that price will reverse there instead of just continuing. Now, what's a sequential SMT, or a SSMT that a lot of people will call it? An sequential SMT is a time-based SMT, and time is a very strong concept that ICT uses. I know that Trader Day made a whole thing about it, but time in general, if you use time in your concepts, it'll be a lot stronger. We can see that in standard deviations. We have time-based standard deviations, time-based for value gaps, first presentation. And we have, opening range gap. That's a time-based concept. And time-based liquidity as previous day high and previous day low, and session high and session lows. They have a big impact on the market. And they are just an overall stronger version of concepts that ICT has in general. Now, how would we find a sequential SMT? We know what it is, but how are we going to find it? Well, first, you need to find a normal SMT, right? Go on your pair, go on NQ, ES, YM, Euro, USD, GBD, USD. Find your SMT like this. And then use Day's quarterly theory indicator, unless you want to calculate it, which is super inefficient. But use Day's quarterly theory indicator by 2 degrees to see if the first swing high is in one box, and the other swing high / low is in another box. So I'm going to try to give you a best understanding that you can try to think of right now in this presentation. So let's say 1 quarter, if you haven't watched my quarterly theory video, definitely go watch that. That's going to help you a lot. In one quarter is in this high. This high is in quarter 1, right? And then this high is in quarter 2. That means if this high was in quarter 1, this high was in quarter 2, this would be a sequential SMT because it's a time-based SMT. So that's what I mean by if the first swing of the SMT is in one box and the other swing high or swing higher / low of the end of the SMT is in another box, then that would be a sequential SMT. But something I did not include in here is that they have to be back-to-back quarters. They cannot be quarter 4 and quarter 3. No, it can be quarter 4 and quarter 3, my bad. It can't be quarter 2 and quarter 4 or quarter 1 and quarter 3. Why? Because they're not back-to-back. It needs to be quarter 1 to quarter 2, quarter 2 to quarter 3, quarter 3 to quarter 4, quarter 4 to quarter 1. See how they're back-to-back? That's what it needs to be. Another very good concept that you should have in the back of your mind is that for everything, higher time frame is more power. Higher time frame PD rates are stronger. Higher time frame liquidity is stronger. Higher swing highs and swing lows that you can see on the higher time frame are stronger. So that applies to sequential SMTs or SMTs. If you have a 4-hour time frame monthly cycle SMT, sequential SMT, it can influence where the market is going very strongly. It is one of my personally, it is one of my favorite confluences to have for a trade since it's such high probability. If you have usually, I don't even need to have some parts of my model if there's a 4-hour time frame SMT. But since it is such high probability, it is less like it has a less probability to happen, but it has a high probability to execute the direction of the trade. I know this all may be confusing for now, but I'll clearly show it in chart examples when I'm done with this little slideshow. Now, all of the forms of cracking correlations, what does CICs mean cracking correlations? Sequential SMTs and SMTs, we just went over that. That's a cracking correlation since there's a divergence. In my other video with precision swing points, you see the swing point right here is different from this, like the candle right here is different from the candle right here, and they need to be correlated assets. Now, SMT fill, I've not gone over that yet, but I will be going over it in the chart examples. But SMT fill is basically when price taps or makes an imbalance, or taps a PD array, or makes imbalance, and the other correlated asset doesn't tap it or doesn't make the imbalance. That's what an SMT fill is. It's just another like confluence to your trades. And this, although this is the same photo as this, it's something a little bit different. It's hard to show on the slideshow since you need candles and it's replay trading doesn't have that side to side thing. But a HSSMT and HSMT is a hidden sequential SMT. And a hidden sequential SMT is when the wick, when the bodies close over the bodies of the first swing. It's super confusing to understand here, but it's I'll show you in the charts to give you a better understanding. It's basically just an SMT with the bodies. Yep, that's the best way I can say it. And there are a few more concepts that I can go over. There's a true change in state, a defining range, and what is it called? And previous and drawn liquidities that you can use. But for now, I'm going to be going over just this, the cracking correlations, SMTs, that, and just the cracking correlations that you've seen. I honestly probably won't be going over precision swing points in this video because it's just going to take more time out of the video, and I already have a video on it, on this topic itself. So I'm just going to be doing sequential SMTs, SMT fill, and hidden body sequential SMTs. And now it's time to show you guys everything we have discussed on this presentation into the charts so you guys can see what it looks like in candles instead of just drawings. Hello everybody. In today's video we're going to be going over sequential SMT. Well, not in this video, but in this clip and chart example, we're going to be going over sequential SMT and SMT. Just take two birds with one stone, or whatever the saying is. Now, what can we see prior to, I always love saying like, what can we see prior to, before this candle here? Well, like, let's look at market conditions. We have previous day high up here, and we have a few highs up here that we could take out. Look at these equal highs right here that price could take out very well, since there's quite a few, but there's a little bit of buy side liquidity up there. And let's see what else we see. When we scale to the 1 hour time frame, we see that price taps the this 1 hour fair value gap CE. Now that is a pretty good reaction. That's pretty significant internal range liquidity. Let's see. So we tap that 1 hour fair value gap. Now, with that, let's try to find our cracking correlation, our SMT, so we can, get a little bit more on this trade. Now, switching over to ES, what do we see? Price hasn't taken out that 1230 high, 1230 low. And what do we see on NQ? Price has taken out that 1230 low. So what can we say? we can say that this is an SMT, right? Because since ES didn't take this low out and NQ did, it's an SMT. Simple as that. Now, let's go over sequential SMT. Look at our day quarterly theory by 2 degrees indicator. Let's expand that. And what do we see? Price. See, this is what I was talking about, the boxes. Look at the boxes. This first swing of the SMT is in one box, and this swing of the ending swing of the SMT is in another box. On the daily cycle, this is the 15-minute time frame, so it's the daily cycle. But what does this tell us? This is a sequential SMT. Why? Because the boxes are back to back. Get that checklist, back to back. Sequential SMT checklist. I'm gonna make that for you guys. It's very short, but it's very strong. Quarters and SMT. There we go. Back to back quarters and SMT. So this would be a daily cycle, DC, sequential SMT. Now we make that. Let's see if we can check for anything that we have. Maybe, so this is on the 15-minute time frame, by the way. So now that we know we are on the 15-minute time frame, right? What else do we see? Just let's take a little glance, okay? We see that we have this candle at 7-Eleven. See, at 7-Eleven, we have a doji candle, and then on YM at 7-Eleven, that candle isn't even seeable. So a doji candle is not a, what is it called? It didn't move, okay? So what can we use with that? We could consider this a PSP. I like considering doji candles as a PSP. You might not, you can, but I personally use that as a, what is it called? A PSP. Now that we have a drawn liquidity, equal highs and previous day high, daily cycle sequential SMTs cracking correlation, a PSP right here, and we have a 1 hour fair value gap, a higher time frame PD array supporting that idea, we can target previous day high or these equal highs. Take a partial off at 1 or whatever. But let's see how this plays out. Near 5-point stop loss. Price comes up. Well, I should just forward it a little bit. I don't want to really wait that long. I'm a little impatient. Sorry, guys. Down. And we take out that take profit. That price says flown past. But that you get the little basic ideas of it, right? We see that we have our sequential SMT right here, our 1 hour fair value gap, and then our precision swing point to confirm that sequential SMT, and then we can push higher to a clear draw on liquidity with those equal highs and those previous day highs taken as collateral. Now, actually, before we move into our next step, because I haven't really recorded this, I want to see if we created a SMT fill so it can just take out another bird. But okay, we have made a sequential not a sequential, SMT fill. What is an SMT fill? When price doesn't tap into a fair value gap or an order block on another asset, but one asset does. So what do we see? On NQ, on the 1 hour time frame, we tapped into this fair value gap made on the candle at 11. Okay, this fair value gap was tapped into. On ES though, at 11, there was no fair value gap formed, and price couldn't tap into one. That makes an SMT fill, and I want to see if we can actually find the version where it makes an imbalance, but I don't think. Well, another version of an SMT fail is when price doesn't make an imbalance. But that is usually for entries. It's not really for like higher time frame narrative. But for lower time frame, it's when price doesn't make one, so you can use that as an entry trigger. Or, but for higher time frame narrative, it's when price doesn't tap into one. That's just basic as it is. That is an SMT fail. And for our last portion of the video, we're going to be going over hidden body sequential SMT, and it's a pretty easy concept. It might be done in like 2 minutes. All right, see you guys in the next chart example. Hello, everybody. In our last chart example, we're going to be going over hidden body sequential SMT. And hidden body SMT. We went over what a sequential SMT was in the last one. So kind of just keep that idea in your mind of how a sequential SMT works. We're going to be looking on this at the weekly cycle. So what do we see? First of all, well, we're not even really going to be going into like, but this is just going to be an example of showing a sequential hidden body SMT instead of like what is it called? Showing you like a trade example with it. I might show one in the Discord, but not in this video for now. But okay, what do we see? For a hidden body sequential, hidden body SMT, we're gonna be really looking at everything but. So turn off the wicks. So what do we see? This low was created here, and these lows were created here. Now let's look on ES. Oh, would you look at that? These lows actually got taken by ES, but NQ did not take those lows out. So what can we call that? A hidden body sequential a hidden body SMT. HB SMT. That is basically all it is. I know that that clip was very short. It actually is in the live market right now. I guess you could be like turn the wicks back on, but price will probably be heading here. I might just put in the announcement like, oh yeah, drawn liquidity got hit. But yeah, so that is a hidden body sequential SMT. That's simple as it is. Turn off wicks, see if the bodies have closed over that low. If it has, then that's a hidden body sequential SMT. It can make your sequential SMT stronger. But yeah, that's basically all it is. And thank you for watching this video, and see you guys in the next one.